Penny stock billionaires, I want to share something very, very important for you. So watch this video if you want to make, 10 times your money, 20 times your money or more with cheap penny stocks, and avoid being like the average investor. The average investor loses money. They end up as bag holders. So I'm going to show you a couple of key things you need to understand with these stocks when you're getting involved. Now, again, I'm going to use a case study of Nexttech as an example. And again, this is not a buy-sell recommendation. I'm not saying it's going up, it's going down. They're not a client of Wall Street Reporter at this point. But I want to use this stock to illustrate something very important. So again, first of all, in case you guys don't know, I wrote this book, 10 Bagger Blueprint. It's a #1 bestseller on Amazon. Why did I write this book? Well, I'm in the business of stock promotion, okay? So my job is companies pay me to help their stocks get more eyeballs on their stock, and basically to make the stock go up, to get more liquidity in the stock, to maximize shareholder value. Usually these companies are undervalued when they first approach me, and again, they're in the toilet, they're deeply undervalued. They want to get more eyes on the stock, they want to get to their true value. Maybe they want to raise capital, and again, we've helped companies raise, over $2 billion in capital. I shouldn't say helped. We've created a situation by liquidity and market support where they were able to attract that capital as a result. Now, here's something interesting that happens. Again, the reason I wrote this book is because I can't tell you to buy or sell these stocks, okay? I have a conflict of interest. When we have a stock that we are promoting, when we have a client stock, I can't tell you that it's time to sell the stock, it's time to buy the stock. I can't tell you any of those things. The reason I wrote this book is so that it gives you the proven blueprint of what to look for. What are the signals of when to get in and get out of these stocks? Now, it was very clear. Again, if you read the book, you would have known to get out of many of these stocks. And I'm going to show you a couple of examples. I'm going to show you some case studies. By the way, guys, I have here on this thing the $1 trillion man. Now, some of you have been saying $1 trillion. Oh, it's a fraud. It's a scam. Watch this video. Pay attention. I'll show you exactly how. I've created over $1 trillion in wealth for investors. I'm going to prove it to you very simply, but just stay tuned. So in case you don't know, if you're brand new, if you've never heard of this before, again, my name is Jack Marks. I published the Wall Street Report. By the way, here's one of our old issues here. But anyway, our goal is to bring you those stocks which have that 10x to 100x potential, right? Especially the next super stocks. And again, we work with two types of companies. So I want you guys to get this through your head. When we introduce a company as a next super stock, that means it's a company that we expect, has that 10x to 100x upside potential. That's right, 100x. And we have had 100 baggers on Wall Street Reporter, stocks that we introduced to investors that wanted to increase 100x. Stocks like Axon, Rick's Cabaret, MicroStrategy, all those companies you would have discovered. That's right, in the pages of the Wall Street Reporter from way back in the day. You could have gotten those stocks cheap. But in the last few years, I've been focused. Again, we worked with all sorts of companies, but in the last couple of years, I've been focused exclusively on stocks which have that 10x to 100x. And then we also work with, regular companies which we just want to give, they want some more visibility, but, they may not have that 10 bagger potential. Maybe they could be just regular multi-baggers, right? Just to be very clear. So when we label a stock as a next super stock, that means I believe that stock has at least a 10 bagger upside potential. And what that means is the stock has got to be dirt cheap when we get into it. Again, I give you the whole formula in the book, and the fact that some of you guys have not even bought this book yet is, I think you're doing yourself a disservice. And that's why most of you guys are bag holders right now in stocks like, Nexttech or even Cytodyne. I'm going to show you some examples here because you didn't follow the formula. Again, I look for stocks where they're dirt cheap when we get in. There's multiple catalysts. It's an asymmetric setup. What's an asymmetric setup? Well, if you read the book, you would know. Now, let me show you something real quick. So this is some of the winners we've had in the last couple of years. We've had 12 stocks that won between 1,000 and 5,000%. Cytodyne, 2,000%. Let me make this bigger so you can actually see. So I show you when we introduced it and where the stock went. Right, Visby. By Visby, any of you guys are bag holders in Visby? Well, you would have known to get out last January. Now, what was the signal to get out? The signal was when Jay Hutton, the failed CEO of Visby, stopped coming onto our program, even though he signed the contract. Why? Because the guy had no balls, okay? The guy just doesn't know how to promote the stock. And look where he is now. The stock was over $1, and the stock today is a nickel. That's right. And what was going on during this whole time? Jay Hutton was relying on Penny Queen, Penny Pimpstress or whatever, or Greasy George or Gorcom, other losers out there to share her story. And by the way, all those people, they were promoting his stock as it was going down. That's right. They were making you bag holders, the Penny Queen, with the Discord channel, the Pump and Dump channel. They were promoting the stock as it was going down. They were interviewing Jay. They were basically complicit in this guy's massive disaster here. Now, again, you would have known to sell the stock as soon as he stopped showing up on the Wall Street Reporter program. Why? Because that's a signal. Again, if you read the book, that was one of the signals. So Visby, that's one of our former winners. How about Peak Fintech? That's right, Peak Fintech. Oh my God, this is the stock that went up 20x. It went to $14. Where's the stock today? 14 cents. That's right, it's 14 cents. You know what? If you read my book, you would have known what the signal was. What was the signal? The signal was, our contract was up. We were no longer involved with the company, and you could see what was happening on message boards, social media. Everybody was saying, hey, this thing is going to go to the moon, blah, 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 life-changing wealth, all this nonsense. I talk about all the social signals, everything to look for. Today's stock is 14 cents. By the way, the company did phenomenally when they were on a program. They ended up raising $50 million. That's right. It was life-changing for the company. Now, why did we not continue with Peak Fintech? Very simply, the stock went up already 20x. It was trading at a $500 million valuation at the time our contract was up. And you know what? I didn't see any further upside. I mean, it was priced to perfection. Again, not making any, analysis of the business model or anything, any of those other things. It was priced to perfection where it was. Okay, the valuation was very high. They had accelerating revenues, but there was also some dangers because of the China. So there was a bunch of things which I talked about. Again, when I can't tell you to buy or sell a stock, but again, if you read my book, you would have known those things. Valuation is everything. Because when I get involved with the stock, my goal is to make money on the options. Okay, I don't make really money charging a company a fee. I'm not like one of these low-life stock promoters, IR firms that just try to milk a company. I'm looking to make a big score, right? If the stock goes up, I hope to get options which will become worth something significant, right? Otherwise, I'm not really interested. I'm interested in the big score, basically. Because you know what? To me, that's what makes it fun. That's what makes it fun. So you would have known to get out of Peak Fintech. You would have made 20 times your money. How about CBDT? Wow, what an egregious example. CBDT, that's a stock we introduced at a nickel, went to over $2.50. And you know what? Our contract was up. The company was priced to perfection. The CEO dropped the ball. I mean, there was nothing else we could do. And again, that stock probably should have only gone up, not 5,000%, probably should have only gone up 1,000%. It should have been 50 cents, 75, but it was a hot market. So things get exaggerated. Again, if you read my book, 10 Bagger Blueprint, you would know what happens and how to, how to position yourself in different market situations. Now, hold on a second. I'm going to get to the good part that you're waiting for. I just want to finish up. Okay, Nexttech. Now, here's a stock that we introduced, of course. I'm going to give you that example. I'm going to show you another chart right now. Fans Unite, another example. We introduced that stock at 17 cents, went to over $2, and today it's a nickel. Why? Because the CEO, again, dropped the ball. Now that's a stock. That is a stock that we wanted to promote about a year ago. I came back to them. I offered them, hey, guys, let's get some eyeballs on the stock. You got things happening. They ignored me. And you know what? Today's stock is a nickel because this guy, Scott Burton, is busy stuffing his face with Doritos, watching, tentacle porn or whatever he's watching, anime porn, instead of promoting the stock and executing, right? That's what happens, guys. Again, I don't know what he's doing on his computer, but who knows? How about Imagine AR, right? That's a stock. It went up 1,700%. ESE Entertainment, another one, right? Again, guys, you would have known to get out once ESE was no longer on our program. Again, it's here. I'm going to show you something very interesting. Oh, that one is not for you. If you're enjoying this video, make sure to click that like and subscribe button to subscribe to our YouTube channel. Also get the notifications to get updates on all our latest videos. And of course, make sure you get a copy of my #1 bestseller book, 10 Bagger Blueprint, #1 bestseller on Amazon. Gives you my proven framework, the proven system for finding stocks that can go up 10x to 100x. Now look, I've created over $1 trillion in wealth for investors over the course of the last 25 years. And this book gives you that proven framework, a proven 10-step system for finding those stocks which can go 10x to 100x. It tells you the signals to look for, when to get in, when to get out. It goes into fundamentals, technicals, charts, all the stuff that you need. So again, 10-bagger blueprint on Amazon, and here's to your 100x. I'm going to show you something very interesting. There's something called the Wall Street Report effect. Why is it that stocks go up when they are on Wall Street Report? Why is it? You're wondering. I'm going to use this case study of Nexttech as an example. Again, I'm not here to bash Nexttech. I just want to make that very clear. I'm not here to bash Nexttech. The reason we're not working with Nexttech, very frankly, is in January, the stock was trading at a, I don't know, 60, 70. We did a great job. Look, the stock was over $1, right? When we took on Nexttech, and again, you see those purple lines at the bottom, that's the period of when Wall Street Reporter was involved with Nexttech. So again, we got involved at 50 cents, went to was it 750? I'm using the U.S. numbers, and then again back last year. Now, when we took on Nexttech last April, the stock was in a massive downtrend because they had raised $10 million from a hedge fund that was dumping the stock. So when I took on that mandate, I knew that okay, there was going to be a lot of pressure on the stock, and it was going to be dropping for the next month. So we had to do whatever possible to support it to kind of soften this down thing. Now, if we weren't involved, okay, if Wall Street Report didn't come in, Nexttech, in my opinion, would be probably a nickel, just like all those other stocks I showed you, just like Visby, just like all those other Mooch bumps. I got to tell you something. Look, to the credit of the CEO of Evan Gappelberg, the guy's a relentless stock promoter, and that's why that stock has been able to maintain valuation. Now, of course, it performed significantly better when Wall Street Reporter was involved for a number of reasons. We get a lot of eyeballs on the stock, engagement, etc. It's very, very clear. You can see all those charts I showed you. When Wall Street Reporter is involved with the stock is going up. Now, I didn't show you the aftermath. I only showed you the way up, right? Now, those same stocks, look what happened to them when Wall Street Reporter was no longer involved. What happened? They all dropped. Visibility Group. Even with this guy, Greasy George, who takes credit for all the wins, he was also promoting Fans Unite, CBDT. Now, it's very interesting. By some coincidence, when Wall Street Reporter was involved, those stocks were all going up. As soon as Wall Street Reporter was no longer involved, it was just George Tsioulas, the fraudster, by himself, they all dropped. And George was promoting them on the way down. And he takes credit for all the wins that we created. Actually, we made this guy money, and he's taking credit. And then he snitches on us to regulators. That's right. George is a snitch, as is his partner, the lowlife in Vancouver, Dirty Sanchez Parry, who's another lowlife degenerate promoter who is absolutely worthless. Anytime you see a stock going up with that guy, it's because somebody else is doing some pump and dump, some wash trades or whatever. This guy has absolutely no power in the markets. It's very clear. Now, what you need to understand is, why is Wall Street Reporter so effective? So first of all is this. When I get involved with a stock, with a next super stock, I'm totally talking about next super stocks. These are companies that we had were next super stocks. Again, if you read the book, I get involved with a stock when it's at a dirt cheap valuation. There's asymmetric upside. Okay, you would know what that means if you read the book. I'm not going to tell you right here. The valuation is everything. It's got to have a good technical setup. You got to have multiple catalysts. You got to have a CEO that gets it. Okay, now Nexttech last year, January, the stock was priced to perfection. $80 million market cap. We did a great job. Stock was over $1, and you know what? I didn't see any further upside because there was no revenue velocity. Okay, in order to maintain that, to support that type of valuation in the bear market. Again, we were in a very vicious bear market last year, if you guys don't remember. All those stocks dropped without market support. Those stocks you see, they're down 90, 95% because they had no market support. The reason Nexttech maintained value is to the credit of the CEO, relentless in promotion, and of course, made a very smart decision re-engaging with the Wall Street Reporter, right? And by the way, he came to me. I didn't come to him, saying, hey, because this guy is smart. It's very simple, okay? Now, I didn't see any upside. And again, I make my money options. I didn't see the stock being able to go any higher. It could just churn or whatever. And also there's a couple things I kind of didn't like. I'm not going to get into it here, but there were some strategic issues I don't want to get into here, which I thought were a distraction, and the company was not going in the direction where value could be created. Again, my opinion, forget about all that stuff. But to me, basically, the stock was fully priced, and there was no further upside. So I'd never sent them a renewal proposal or contract. So anybody tells you, oh, Nexttech dropped Wall Street, No, we dropped Nexttech. And I'm not saying it in a negative way. I'm just saying it just didn't fit a next super stock criteria. It could be a good company to interview. The guy is a great promoter. They always have news flow. Very interesting company, but it's not. It's no longer a next super stock, okay? Because they just don't have that upside now. It's basically, I call it, it's in the zombie stage, because unless they really execute, have massive growth, it's not going to happen. And they're not doing it. It's not happening. The spinoffs, I think, is a distraction. I'm not going to get into all that stuff. But, and also the AR story, as you guys know now know, my thesis was, okay, the Apple AR glasses, that was going to create a hot sector. We saw the Apple AR glasses came out last month. A total disaster, total bomb. Again, buy the rumor, sell the news. You would know this if you read my book. Now, I'm showing you here what happens. You saw the purple line is, you remember that, any of you kids, remember that commercial on TV? This is your brain on drugs. I don't know, this is from the 80s. They showed a frying pan. This is your brain. That's your brain. No, the frying pan. No, the eggs. They dropped the eggs and the eggs fry. That was your brain on drug. Basically, it was to tell you not to do drugs. Okay. So this is your stock with Wall Street Report. This is your stock without Wall Street Report. It is very clear. You can see Nexttech is going up when it has Wall Street Report. Nexttech drops without Wall Street. It's not Nexttech. It has nothing to do with Nexttech. It's every company. It's every company. It happens every time. Now, you're going to ask, why does this happen? Why does this happen? Is this a pump and dump? Is it a pump and dump? My friends, the answer is very simple. When we get involved with the stock, it's usually undervalued, okay? After we do our job, the company reaches full valuation usually, right? So the job is done. We move on, basically. We don't usually, again, most of those things I showed you, those stocks, we were no longer involved in those companies. Again, by the way, there's guys saying, oh, this guy's pumping up. These stocks are down. Those stocks, when we left, when Wall Street Report's contract was up, all those stocks were up. And they were actually kept, they were more or less in that area for months afterwards, right? They didn't just collapse. It's not a pump and dump where, oh my God, it's a pump. No, we created an organic following for these companies. Okay. In the case of Visibility Group, ESE Entertainment, perfect example, right? We created an organic following for the stock. That's where the stock went up. Now, once the company stops promoting with Wall Street Report, once they stop engaging with the Wall Street Report audience, investors know the jig is up. The juice has been squeezed from the lemon. The upside has been fully squeezed out. And, who knows? It may continue. You never know, whatever. But generally what happens is after these companies are no longer a Wall Street Reporter, they kind of, their audience evaporates. And that's why you see them decline very slowly. Again, we've never had a stock decline while they were in Wall Street Reporter. Okay. We don't have situations where we bring on a company and, 3 months into our contract, it's down, 75%. We've never had that. Okay. Now, who's had that? Greasy George, Agoracom, Pigface, Dirty Sanchez, Chris Parry. He does that. He takes on anybody who pays this guy. I mean, these guys are prostitutes. They're whores. I mean, these guys are desperados. They're like a low-life, degenerate Canadian stock promoters. And they're also snitches because these guys also made false allegations to Canadian regulators. We had to send also paperwork, and it ended up being nothing. But basically, your taxpayers, but if you're Canadian, your taxpayers went to pay for that. So, if you're in Vancouver and, you're getting robbed, raped, and murdered, it's because, the taxpayer money was diverted from having police into, paying, some guy at the BCSC to write a letter to us and to clients saying, oh, tell us what you were doing. Show us the documentation, show us the interviews, a bunch of bullshit paperwork, hours of just sending out, hey, here's the link. Here's the link to the video. Here's okay. All public information. Okay. Everything we do is fully disclosed. I mean, it is ridiculous. So bottom line is this. We've never had stocks decline on our watch. Never happens. Never happens. These other guys happens to them all the time. Again, company after a few months, after they're no longer a Wall Street Reporter, it's natural that their market support is going to evaporate because they drop their base, okay? Once you lose the Wall Street Reporter base, you're kind of on your own, my friends, right? So again, the Wall Street Reporter, we've been around, 25 years online. This whole business, you see, everybody's doing podcasts, interviews. If you're enjoying this video, make sure to click that like and subscribe button to subscribe to our YouTube channel. Also get the notifications to get updates on all our latest videos. And of course, make sure you get a copy of my #1 bestseller book, 10 Bagger Blueprint, #1 bestseller on Amazon, gives you my proven framework, the proven system for finding stocks that can go up 10x to 100x. Now look, I've created over $1 trillion in wealth for investors over the course of the last 25 years. And this book gives you that proven framework, a proven 10-step system for finding those stocks which can go 10x to 100x. It tells you the signals to look for, when to get in, when to get out. It goes into fundamentals, technicals, charts, all the stuff that you need. So again, 10 Bagger Blueprint on Amazon, and here's to your 100x. Into this business, okay? That's right. I invented this business. Okay, 25 years ago, we were the first guys doing online interviews with CEOs. Nobody was doing it. It was a whole new technology. You had to have audio interviews, etc. I'll tell you about that in a minute. But okay, and we've interviewed thousands, over 10,000 companies in that period of time. You know, from the '97 to whenever. The point is this. The point is, you know, when we bring a company onto, especially the Next Superstock platform, they're benefiting from a brand name that's been around for almost 200 years. Okay, this brand, it's a 200-year-old brand, Wall Street Reporter. So it's a trusted brand, and it's the track record. Nobody has the track record of Wall Street Reporter, which I just showed you. Nobody has those 10 bagger stocks. Nobody has as many 10 baggers. Anybody who claims they do, like Greasy George, they're just piggybacking. They're riding along on. They're piggybacking on our work, and you can see clearly night and day what happens when Wall Street Reporter is not promoting those stocks. Now, let me tell you something very interesting. There's another reason why these stocks drop after they're no longer on Wall Street Report, and their answer is this. It's actually interesting. You see, when a company is on our program, I get very involved with the CEO, right? I spend a lot of time with them. I help them craft their story, their news releases. I engage with them on potential M&A, all sorts of strategic details, right? And at the same time, they know that they're accountable. When they're in the Wall Street Reporter program, they know that we expect them to perform. We expect them to be 10 bagger stocks, okay? There's an expectation. There's an audience expectation. And they see other companies that we have on the program, the peer group, that are performing. These stocks are going up. So now these guys feel the need to perform, okay? It's a competitive thing. It's a normal, natural, it's just normal human nature that when you're surrounded by winners, you're going to be a winner. When you're surrounded by losers, your stock will be a loser. That's why, you know, when we bring in a company onto Wall Street, those stocks tend to perform. Now, what happens is, so they're held accountable. These CEOs know that they have to deliver certain news. That's the other thing, by the way. You know, I tell these guys, look, if you want to get results, you got to show up on a program twice a month. You got to deliver at least 3 news releases a month. Okay. And there's plenty to talk about for any company. You need help? I'm happy to help you. Okay. I work with many companies in crafting their press releases. Okay. By the way, the Nexttech's best press release, I don't know if you guys know, was when I was involved, but that's neither here nor there, or other companies as well. Because look, you know, you talk about the $1 trillion man here, right? Once these guys are no longer on Wall Street Reporter, they become fat and lazy. Nobody calls them up every other day, says, hey, let's get some news out. Nobody's doing that. By the way, you know how many times some of these companies, we have a couple of deadbeat companies right now on our platform, guys who are not delivering. They haven't been putting out news. You know how many times I have to call these CEOs? Do you have any idea how much work that is? I mean, I'm not going to mention any names right now to protect the guilty, but anybody who's watching knows who they are. So I put a lot of work into this. These other guys, Greasy George, they don't call up CEOs and say, hey, let's get some news flow because they're lazy. They don't want to do any work. They're just mooch bums, okay? My goal is to make you rich. You have to understand this. My goal is to make stocks go up. When stocks go up, you get rich. Why do I want you to get rich? Because I'm a nice guy? No, I don't care about you. I'm being honest. I don't care about you. But if you make money, if you get rich with these stocks, what that means is you'll have more money to put into the next deal we bring in, okay? So when you benefit, I benefit, okay? The only way I can succeed is if you make money with these stocks. That's why I wrote this book, so that you get in and get out and make a profit, so you have money to go into our next deal, so we can keep the thing going. That is the whole point. That's all I care about. So I need you to make money with these stocks. I do not want you to be a bag holder. I cannot have you being a bag holder in a stock because then your money is tied up. You're losing money. You can't put money into our next deal to make that go up, right? It's it's like a Ponzi scheme in a way. A legal Ponzi scheme. I'm just being completely transparent with you. Nobody's going to tell you this, but this is the reality. So the problem is, once these guys are no longer on Wall Street Reporter, they become slackers, they become fat and lazy. Nobody holds them accountable, and nobody has expectations. The expectation thing is very critical. You know, it's interesting. There was an experiment done with a school teacher. She was given a class, and they were just told, "Oh, these kids are all absolute geniuses, unbelievable." And you know, and because that teacher expected, like for whatever reason, those kids had incredible grades. At the end, they said, "Hey, by the way, these kids are just regular or whatever, just average students." But because the teacher had high expectations, they made them. You know, it's a whole human thing. When we expect, when somebody expects great things of us, like your parents, if they expect great things from you, you're usually going to rise to that occasion, right? It's just the way it is. And what happens again? ESE, perfect example. That guy could have been a superstar. Skylight Health, Prad Shakar. Prad could have been an absolute superstar. But when he was no longer a Wall Street Reporter, the guy fell apart. The stock ended up being, I know, it's delisted. Jay Hutton. Jay, it was a lot of work. That guy is a very, he's a difficult student. But that guy could have been a superstar. Why? Now imagine, Jay, if he's watching this guy could have, had a stock, a $3-5 stock today. He's an AI stock. Nobody knows about it. That guy could have been a superstar. Why is he at 5 cents? Because he's got a big ego. He's got a big, stupid ego, stupid head, and he's got no balls, okay? He listens to stupid people. He's got no balls, and as a result, he stopped promoting the stock on Wall Street Reporter, and he suffers the consequences. Now I want to end up on one note. I call this ESS the $1 trillion man, and some of you are saying, "Oh, this guy's not the $1 trillion man. It's a lie. He never made $1 trillion, and it's all exaggeration." Well, first of all, here's what you need to understand. Whenever I say the $1 trillion man, I'm always doing it as part of an introduction. I say Wall Street Reporter has created over $1 trillion in wealth for investors over the last 25 years. Is that true? It is 100% true. I'm going to prove it to you right now. In fact, it's actually conservative. I think it's probably, the number is probably 5 billion plus. Okay. Now, how does that work? So I'm going to prove it because a lot of you guys are incredibly stupid. A lot of you watching this, especially some of the Nexttech bag holders that I see on the message boards and forums, are saying, "Oh, this guy Jack, he's got no credibility." Well, if I have no credibility, why is your stock down when it was going up when I was involved? Think about it, right? I know that, oh, this guy he's a clown when he does these interviews. He's interrupting the CEOs. He's blah, 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 blah. You know what? Look, guys, I just know how to make stocks go up. When I do an interview, there's a specific purpose to that interview. If I'm interrupting a CEO, there's a purpose to it. Okay. I'm not going to tell you I'm not going to reveal the secrets. The magician's secrets will not be revealed to you, but there is a very clear reason to everything that I do. Okay. And those of you who are not smart don't understand these things. Those of you who understand human psychology, NLP, who understand market. Well, I'm not going to get into all the details, but anyway, the point is this. Wall Street Reporter, we started online in 1997. If you don't believe me, go check it out. Prove it to yourself. Go to Wayback Machine, Google Wayback Machine, type in a Wall Street Reporter, see some of our old interviews. We've been around since 1997 online, and we've interviewed 10,000 companies. That's right, 10,000 companies were interviewed on Wall Street Reporter. And by the way, they're not penny stocks. Most of the companies we interviewed were New York Stock Exchange, NASDAQ, NYSE, MX companies. Here is an example. This is a company. This is from November 1998. Look, can you see this? I don't know if you can read some of the companies. I don't know if you can see this, but who's on the cover? We got King Pharmaceuticals on the cover, which was a NASDAQ company. It was a super stock. By the way, the guy who sold this company to King Pharmaceuticals is actually one of our clients now, which is Nova Mentis, Marv. Dr. Marv sold his company to King Pharmaceuticals, which is a high flyer in the late 90s. We got Biker's Dream, Host America, Impact, another massive winner. Waste Connections, Quixote, Quicks. Quicks was the symbol. I wonder how that was another super stock. Again, super stock companies, right? Again, let me give you another one. By the way. Oh, this is our gold issue. This is from 2005. So again, we were printing magazines also. We're doing print. This is, by the way, I didn't just print this out of my laser printer. Okay, this is our conference, 2005. Now, which companies are on the cover? Let's see. We got Agnico Eagle, Rio Tinto, Bonaventura, Gammon Lake. I don't know these guys. Compass Resources, Australia, blah 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 blah. Okay, and we got what's his name? Peter Grandich. Some of you Canadian low life degenerates know who that is, right? He's a famous gold guru. Okay, by the way, in case you don't believe me, these are the companies on the cover. Okay, now where am I going with this? Right, so we've had 10,000 CEO interviews. Thousands of these companies had market valuations of, let's call it, $1 billion plus. In the case of Agnico or Rio Tinto, these are 20 billion, 10 billion, 20, whatever the huge numbers, right? Now, let's do the math. If we're dealing with mid-cap companies in the most cases that we were interviewing. We also have microcaps. If we have a stock that is $1 billion valuation when we interview them, a couple years later or months later, the valuation is now $2 billion. The stock just doubles. The valuation is $2 billion. So $1 billion in wealth was created. So we introduced investors to a stock which went on to create $1 billion in wealth. Now, what if you have 500 companies that increase by $2 billion? Is that possible? Yes, it is, because we've done, again, 10,000 interviews, companies like this. Okay, how about this? How about Boston Beer? You ever hear of Boston Beer? This is one of our early issues. How about Prepaid Legal? Now, some of you guys don't even know Prepaid Legal. That was a $50 stock. That went from 50 cents to $50. Okay. We got Boston Beer. We got Gencor, Herex, Telco, all these great companies on here. Unbelievable stuff. So if we had, let's just say 500 companies that increased by $2 billion valuation, which is nothing, by the way. These are, again, mid-cap companies that are 5, 10 billion. That's $1 trillion. Again, do the math. 500 times 2 billion is 1,000 billion. That's $1 trillion. Now, some of you still don't believe me, so I'm going to give you something very interesting. Here's something interesting. I'm going to close on this note. Now, just the other day, I tuned into this interview, this CEO experience with Evan Gappelberg. He's doing some podcast, which I think is whatever. But I'm just wanted to check it out. What is this? And I hear this voice, a very familiar voice, interviewing. I said, "Shit, what do I know this voice from?" Lo and behold, the guy says, his name is Todd Santorelli. Todd Santorelli. Now, where do I know Todd Santorelli from? Well, this is from 2005, and Todd Santorelli. Can you see this? He's right here on our masthead. See, that's Jack Marks right there. And Todd Santorelli, one of our analysts. That's right, Todd Santorelli, a guy I trained to. That's right. Yours truly, the $1 trillion man. I just showed you that $1 trillion script. I trained Todd Santorelli how to do CEO interviews. And you know what? Todd was doing about 4 or 5 CEO interviews every day. By the way, they're all scripted, not the stuff I did. This is all scripted 15-minute type jobs. Yeah, like the garbage you see copycatted by guys like, what is it called? All these companies out there, Stockhouse or blah, blah, whatever. All these knuckleheads out there do the same 15-minute nonsense. Now, Todd was doing 4 or 5 interviews every day, mid-cap companies, New York Stock Exchange, NASDAQ, and he was with us, I believe, for 4 or 5 years. Now, at the same time that we had Todd in a studio, but we had these were dedicated studios. We had an engineer and everything. I had 3 to 4 other analysts. So we were doing sometimes 20 interviews a day. That's right, 20 CEO interviews every day, ranging from penny stocks to large cap companies, everybody in between. And that's how those numbers add up. That's how we get to 10,000. Okay, now we've gone to a completely different business model. As you guys know, we're not doing those companies. We just focus on 100 baggers now, 10 baggers. But if you don't believe me that we did all this, just ask Todd Santorelli, who is now interviewing Evan Gappelberg at Nexttech. Now, that is how the $1 trillion man story works. Again, when I tell you, that I'm the $1 trillion man, it's not, I didn't come up with that name. Somebody just said, hey, you're the $1 trillion man because you had all these massive winners. And you know what? I kind of liked it. It stuck with me. So I said, I'm going to say, look, I'm the $1 trillion man now. So the $1 trillion man wrote this book revealing all the secrets of how you can get in and get out of these stocks, make massive profits. And that's it. So guys, I hope you got something valuable from this. I'm not doing this for my entertainment. I need you to make money. You have to understand this. I need you to make money with our stocks. Why? So that you can get out on a profit, go into our next deal. I'm going to have some very exciting companies coming up. So make sure you get the book because I will never tell you when to sell these stocks. I will never tell you that. Okay. You never hear me saying that. You got to learn from yourself. Anyway, guys, check it out. And here's to your 100x success. If you're enjoying this video, make sure to click that like and subscribe button to subscribe to our YouTube channel. Also get the notifications to get updates on all our latest videos. And of course, make sure you get a copy of my #1 bestseller book, 10 Bagger Blueprint, #1 bestseller on Amazon. Gives you my proven framework, the proven system for finding stocks that can go up 10x to 100x. Now look, I've created over $1 trillion in wealth for investors over the course of the last 25 years. And this book gives you that proven framework, a proven 10-step system for finding those stocks which can go 10x to 100x. It tells you the signals to look for, when to get in, when to get out. It goes into fundamentals, technicals, charts, all the stuff that you need. So again, 10 Bagger Blueprint on Amazon, and here's to your 100x.